Welcome back to Gen Z Speaks. As you can see, this is not a typical episode. The point of this episode is we're going to have these weekly conversations with each other and recap weekly news stories within the each sector that we're interested in and just give our commentary on it. And again, separately on the weekly level, we're also going to be releasing our conversations with people that we've done over the course of these last few weeks, and that's going to be separate from this. And so the point of this again is just to get our opinions on some of the current events that are happening, and we plan on doing this every single week. We don't know exactly what day, but we'll promise you that we'll consistently release these episodes just so our voices can be heard by the world. But without further ado, let me just introduce my fellow co-hosts. With me today, we have the business savant, the future of real estate, the soon-to-be real estate tycoon, Matthew Gutierrez. How are you doing, man?
Doing well, man. Doing well. How are you doing?
Doing good, man. Hanging in there. And last but not least, the coding prodigy himself, the soon-to-be the soon-to-be CEO of Intel, Jenner Stanky. How you doing, man?
Doing good, man. Just hanging in there.
All right, let's dive right in. I want to start off with a discussion on the economy, what we're seeing in terms of the stock market, the bond market, commercial real estate. There's a bunch of things that are interesting that are happening, but I want to start off with the latest CPI report that was released, which showed that inflation was highest that it's been since 2008. And again, that's obviously because of a lot of factors, supply chain shortages, the pandemic, et cetera. But since Matt is a commercial real estate agent in Los Angeles, and he's actually seeing some of the shortages happening in person, and how a lot of new companies are looking for space, manufacturing space. I just want to get your perspective on what you're seeing on the ground, and whether or not, like, what's your opinion on what's going on in general?
Right. So first off, we'll talk about commercial real estate, and then we'll kind of dive into supply chain logistics and specify on it, right? So first off, there's two types of real estate. There's residential and then there's commercial. Residential, you would consider, the typical homes for family, single family homes. And then you have commercial real estate, which commercial real estate involves retail space, as in stores and storefronts, your typical Target, Starbucks. Then we have office space. So office space is where corporate offices will be located usually, kind of self-explanatory. Then we have multifamily homes, which are apartment complexes or anything more than essentially three units, right? And then we have the field where I'm in industrial real estate. So industrial real estate is a little different in that it deals completely and utterly with businesses and their warehouse or manufacturing space, right? So what this means is we deal a lot with supply chain logistics, and what supply chain logistics is, essentially we have China as an example producing a lot of products, right? And those products are either going to the US, to Western Europe, wherever, right? That's irrelevant. What the relevance is that the products going from China to the US is backed up astronomically. Typically, we see 30 days from China to a US warehouse. Right now, we're seeing triple that, 90 days. The reason's because during the pandemic, e-commerce and any online business shot up, right? Nobody was able to go to stores, so people shopped online. Not only did people shop online, but then there was stimulus checks, and then there was the CARES Act where people got an influx of cash from the government. And what that influx of cash did was it created this inflationary economy where not only are people not working and not earning money, but government is printing money. So when government prints money, that means the value of a dollar is less, right? There's less going into the economy, but there's still money coming out of it, which ultimately affects everybody as a whole. Right now, what we're seeing is it's not really affecting us as much as it did in maybe 2000s, 90s era, and especially 89's downfall. But what I do believe is going to happen with the inflation, how it's going to affect our economy, is that it will inevitably, first off, we've never seen a time in our history where inflation was a good thing and it just kind of flowed, right? We've seen over 40 during Trump's term and Biden's term together, we're seeing over $40 trillion printed. Okay, that's ridiculous. In Trump's term alone, that's over 25% of cash printed in the US history over the past 300 years. 25%, a quarter of all money was printed in 2 years, which is ridiculous. That's a ridiculous sum of money, right? 15 more trillion is going to be printed during the Biden administration. And if there's nothing to level out that money, then we're going to see a financial crisis. Homes are obviously skyrocketing. People are still paying for those homes. So eventually there's going to have to be a check, right? We don't know what the check is. Financial advisors don't know what that check's going to be. What they do believe it's going to be is there's going to be a break in possibly the financial industry, like banking. JP Morgan might say, hey, we can't handle the stress of not receiving mortgages anymore. We can't handle the stress of these low interest rates. We're not making money. We need something, right? So that's where I see this inflation occurring. It's probably not going to be the best for our economy, but it might not be as drastic as we've seen in '89, as we've seen in '07, '08.
So I want to do two things first. I want to break down
Right.
one of the reasons why we have a supply chain shortage. So as you outlined, right, demand was really high during the pandemic. E-commerce blew through the roof. I mean, you can see that based off of just the stock price of Amazon and the net worth of Jeff Bezos, which has just like, exploded. But my point is, one of the reasons that we've not often discussed, and I haven't seen the mainstream media discuss it as much, is this supply chain strategy that a lot of companies have employed. It's called the just-in-time supply chain strategy. Just want to give a little bit of background on this. Back in the 1950s, the founder of Toyota, his name is Kiichiro Toyota. I hope I pronounced that correctly. Don't cancel me if I didn't. But what he did was in the 1950s, he visited Detroit, right, which was once a very prominent place for car making. There were a lot of plants. As you know, Michigan was the home of automaking. But he went there and he saw a lot of waste happening in those warehouses, and he said, what can I do to fix this problem? And he figured out this system, which has now been termed as the just-in-time strategy, where you keep your inventories really thin.
Right.
And what that does for you is it cuts costs for you. And then secondly, if a product doesn't work, since you already don't have as much of it, you can quickly pivot to another thing. And because of the success of Toyota, this strategy has been employed by a lot of companies all over the world in fashion, in other sectors, not just cars. And
Right.
because of that, because of this strategy, some extraneous events like the pandemic, etc., when things like this happen that have global consequences, these supply chains are really tested. And in my opinion, companies haven't really, I mean, nobody saw the pandemic coming. Bill Gates did, but most people did not, right? So we couldn't see this happening. And so companies were kind of blindsided by all this. And this is one of the reasons why, in my opinion, and a lot of people believe this, that our supply chain is being burdened. And so that is one of the reasons why we're seeing a shortage. In terms of the inflation part,
Wait, just to cut you off right there,
Mhm.
let's handle that topic real quick. So yeah, the JIT, the just-in-time rule, has been in place since, obviously you said, the 50s. It's worked because people want to buy things and companies don't want to hold that product. They don't want to call what's called overhead, manufacturing overhead,
Exactly.
right? So they don't want those products sitting there and it just wasting. That costs money. Space is money. So what we're seeing right now is actually the complete opposite of just-in-time, kind of like you mentioned. Supply chains aren't handling it very well because they didn't anticipate. You can't handle something you didn't anticipate. So this warehouse space, right? We're talking about congested ports and warehouse space. Those are the two largest things in regards to this just-in-time thing. So what's happening is companies are realizing that people are buying things, and since we can't have product come in and out, come in from China and go out to the consumer, what they do is they hire what's called a 3PL, a third-party logistics company. And what third-party logistics company do, all they do is handle the freight, meaning cargo products coming in from the port. They store it in their location, and then they'll send it out to, whether it's a Walmart, they'll send it out to maybe a Walmart distribution center, or whether it's an Amazon, they can be Amazon fulfillment centers, right? Where it just goes straight to the consumer. So that's what we're seeing right now. That's the major change in this supply chain era, and is that we're not seeing this influx that's coming in, going out, coming in, going out. What we're seeing is the complete opposite. We have a very lot of product that's just coming in. We have cargo that's sitting on the water for over 2 weeks, right? So not only when cargo gets to the mainland is that it's just cargo that needs to go to the company, but it's a lot of it, right? Because it's continually building up. It's racking up space, and it's just going to these logistics companies. A lot like Walmart, as I use an example, they can't store all this product. So what they'll do is they'll send it to this third-party logistics company, and they'll just have their products sit at that company and try to maintain this just-in-time thing. But it doesn't seem like it's going to be working in the long run, because it's a lot of money. You have to pay premium prices on industrial real estate. Let's talk about the price real quick. So back in December, we're talking about 90 cents per square foot. Let's say you have to hire a 3PL. They have 100,000 square foot building. That back then, that was less than $100,000 a month. Okay. Right now, we're talking about more than double that. So we've seen prices go from $1.50 to $1.80, which is almost $200,000 a month. And that's just ridiculous. So what do? You have to charge either a premium on your products, which consumers don't like, right? Or you have to figure out cost mitigation, and you have to lower drayage costs. Drayage means when a cargo comes from the port to the location. You have to mitigate those costs. You have to mitigate, lighting costs, anything to just lower your costs so you sell your product still.
So again, yeah. So what you're referring to there are short-term things that are happening. What you're seeing happening now, right? And I was referring to kind of what led up to this happening. And I just want to give an example of this. Intel, and Jenish works for Intel, so you might be aware of this. Companies like Intel, which is a big software company, a prominent American chip maker, they have over the course of the last few decades invested more on share buybacks, right? In 2018 and 2019, Intel spent around $26 billion, right, buying back shares. Whereas they recently announced plans of opening up new chip plants in Arizona, and that the cost of that was only $20 billion, so $6 billion less. So my point is that a lot of companies have not been preparing for this, right? And it's worked for them up until this point. And because as demand keeps going up, I'm assuming companies are going to have to change up their supply chain strategies. So moving on from this,
Ibrahim, just to comment on that, the global chip shortage is a huge thing right now, and we see companies like Nvidia, AMD, Intel, TSMC, all these tech companies are having a lot of issues, just making chips. And in our digital age, chips are used literally in everything we do. Every computer, every micro device, everything uses chips. And there's a lot of reasons for that chip shortage. Obviously, you mentioned supply chain issues. That's one part of it. But it might sound trivial, but one of the biggest problems was just poor planning. Nobody, as you mentioned, nobody planned for this. Nobody saw the pandemic coming. And then obviously with the pandemic, everybody had started using, buying a lot of home laptops, home desktops. Companies started buying more tech, and more higher demand, but we can't, the manufacturers can't keep up with that demand. That's why companies like Intel are creating new fabs in Arizona. Just recently spent $20 billion. TSMC, which is a Taiwanese company, has also invested billions of dollars in making fabs in America, so that the everything will be more local to the U.S. market. And this is an international thing. The American government is also putting in billions of dollars into the chip making industry. They're awarding TSMC, Intel billions of dollars to make these fabs. So it's a common. Everybody's kind of working on this right now. Even European governments are trying to deal with the global chip shortage.
Right. What's amazing to see is that, when the world faces these large scale events and as the world gets more globalized, our economies get much more integrated, right? And so what happens, what spreads like a virus spreads in one country to another, we're going to see the repercussions of that on an economic scale, not just on a public health scale. And we're seeing that on the supply chain side, the demand side, and now in terms of inflation. I want to kind of go back to what Matt was referring to here, the printing of the money. Again, that was a measure that the Fed is in charge of, setting up interest rates, right, and having control of monetary policy. And some of the things that they did in the beginning of the pandemic was to, try their best to stabilize our economy. It worked in the short term. We have yet to see if it'll work in the long term. My opinion on this is that, the quantitative easing measures that the Fed did in the beginning of the pandemic, right, providing support to families, as you said, printing money, giving direct stimulus checks. I mean, that was done by the federal government through congressional legislation. But my point is, all these measures that the government took in the pandemic was to support Americans. And Jerome Powell, the chair of the Fed, believes that we have not yet, fully overcame the virus on an economic scale. Some people are still unemployed, right? And the economic inequity gets worse and worse. In terms of racial lines, right? And that's because of historical things. But point is, our economy hasn't fully recovered. And his, reasoning for having these lower interest rates still is it's gonna, allow people to invest and easily borrow. Like you were seeing, the mortgage rates have never been this low. I mean, obviously
Yeah.
housing prices are high, but it's really like if you want to buy a house and you are sitting on a bunch of cash, this is probably the best time to buy it, right? Because the interest rates are extremely low, so you can get a really good deal. But in my opinion, on the question of is inflation transitory, um, Jerome Powell is obviously of the belief that it is. I for the most part agree with him, but the Fed has kind of, in my opinion, underestimated short-term inflation. And again, I'm not in the business of predicting what's going to happen in the economy. No one should be. I mean, people are; they make a living off of it, but it's really hard to predict what's going to happen in the short term. But what I can see happening in the long term, right, is what Kathy Wood, the manager of ARK Invest, actually believes is we're going to head into a stage of deflation, actually, which basically means that as the cost of technology gets reduced, companies are going to actually release products on the technology sector that are at a very low prices, and that means demand is going to rise. And so all these companies that have not invested money into innovation, like Kathy Wood, keeps on insisting, and Kathy Wood's fund, ARK Invest, was the best performing equity fund in the market last year. So I know she knows what she's talking about, in my opinion. And so in the long term, I actually see deflation happening. I don't know if inflation is here to stay. In my opinion, it's going to be transitory, whether that might be a year or 2 years. And I think, Jerome Powell is going to have to reassess things because clearly, it wasn't, inflation wasn't this thing that was just going to go away in a couple of weeks or months. As we've seen in lumber prices, et cetera, right? The prices of used cars, even, right?
Right.
It's something that's a serious concern and should be taken so accordingly.
That's very true. I mean, so we take a look at just what you said. There's a saying, politicians don't make good economists and economists don't make good politicians. It's a very controversial statement, but historically it's very true, right? Politicians, just like you said, they want the family, just like we saw, they want families to be well. They want their citizens to be satisfied and to be content, right? Living in America, even if they're not making money, they want them to be good. So it's a problem, right? Because that's a short-term solution. Printing money and giving it to families, it's an honorable thing. It's a noble thing, but is it necessarily good for our future? Not necessarily, because what that does is it gives them cash, just like you were talking about. It gives them money to survive and, not to pay for their bills. But we take a look at statistics and where did that money really go? Sure, a lot of it did go to bills and et cetera. But I believe over 20% of it went towards, the influx of the economy, buying arbitrary things that people don't necessarily need. And so that's not necessarily a good thing. It could be a good thing for businesses, but not necessarily a good thing for the everyday family.
So, okay, I disagree with you on one point. So the money
Okay.
that you're talking about, I agree with you that obviously, these are things that the government did, and you're agreeing that, this was something that needed to be done in the short term, but you're saying that maybe the government didn't see the implications of this happening in the long term, right? But in my opinion, on your point about the spending of the money,
By the way, I
I,
do believe the government knows the long-term effect on it. I don't think they necessarily cared.
okay, so you think they were just, acting on impulses essentially, right? They were being reckless in spending. Is that like
I
essentially,
I,
right?
I don't
I
think.
don't.
Okay, just
I
to
think
cut.
reckless is a wrong word, but go ahead, Janish.
Yeah, so I think reckless is the wrong word. I think it's just a lot of pressure. Like there are actually families that are starving and that are having problems, and and they can't just we'll just give them money and then like they have to like classify families like,
Right.
hey, we're giving this money. Rather like we'll just give everybody a stimulus check, help everybody out in the economy, and then everybody kind of decided how to spend that money. And some people decided to spend it good, and some people actually needed that money and got that money, which is really good. But what Matt's saying is like maybe other people that necessarily like didn't need the money or weren't going to use it
Mhm.
in the way that the government wanted
Reallocated it
to.
incorrectly. They
Right,
didn't
right,
allocate it correctly.
right.
Yeah, but in my opinion, so the money was meant to be right for those who were in need of it the most. So people who are struggling to meet rent or
Right.
just those basic necessities. So in my opinion, for the most part, people who needed it to the most, right, they spend it very well. And research has shown that direct stimulus checks were a net positive for the economy. I mean, and people, I was reading an article the other day that the saving rates for an average American have been the highest in history because, a lot of people who didn't need the money are just sitting on a bunch of cash, right? And what did they do? They opened up a Robinhood account and put it into the stock market. And even if you're getting money from the government and spending it on consumer goods, you're kind of creating a trickle up economy where the economy is being stimulated by you just, spending uh, on whatever that might be. It
Right.
may
But where does the money come from? That's the
comes
question.
from
If it's just being printed and given handed out
that's
by the government,
so
there's no substance there.
so those are two different arguments. I absolutely agree with you that we're gonna eventually have to deal with this reality that we're printing an excessive amount of money. But your point on whether or not it was used appropriately, I disagreed a little bit on, because I think for the most part, when it comes to spending of the money, people who needed it the most spent it um, rightly, if that's the word. And I think it was a net positive in the short term. I don't know what's going to happen in the long term. You're right. I mean, we might face repercussions, but again, I don't think in the short term that was a bad decision, in my opinion.
Sure, I do. I mean, it was a net positive to this point now. We don't know what's going to happen. I mean, economists are, I believe over 80% of economists believe that things are going to end poorly. And so I don't believe you can say it's a net positive. I think you could say that it was a decent solution for the time being. I mean, it sustained people. They didn't, the whole thing what the government wanted, they didn't want '07 to happen again, where the unemployment rate was ridiculous. I mean, the unemployment rate was ridiculous over the past year, and it continues to increase slightly. But we have a majority of people where businesses are opening up again, but people don't want to work because of they're getting unemployment benefits, which
Mhm.
which we've talked about before. We've had this discussion before in that people don't want to go back to work because they're not getting paid enough, right? Oh wow, the light just flickered. Because they're not getting paid enough. We disagree on this. You believe that people deserve to get paid more in the minimum wage side. I don't necessarily
Absolutely.
agree with that. I don't.
Okay.
But
Yeah, I don't want to go down the minimum wage rabbit hole, but really quickly, on
darn it.
but really quickly on your point on
Yeah,
the '07 crisis, right? So what
yeah,
happened back then, and that's like one of the reasons why I'm so much in favor of these stimulus checks, is a lot of big investment banks, right, got bailed out in 2008 during the crisis, and people, average everyday Americans, obviously protested against that. Why are these big banks being bailed out when they kind of knew what they were doing? And a lot of people on the top were happy with that, right? They weren't questioning why these banks are being bailed out. But fast forward 10, 12 years, when average everyday Americans were suffering and they needed help, everybody, not everybody, a lot of people started to question, hey, what are they going to do with this money? Are they going to actually spend it on things that they need, or what are they going to do with it? And we had a really good conversation with Paul Niehaus, right, about UBI, and we're gonna post that soon. But I think, like, I agree with you in the short. I mean, we don't know the consequences of this in the long term, but in terms of the inflation argument, we haven't really seen massive inflation since Jimmy Carter, right? Since the late 1970s. We keep these things keep on springing up over the course of the last 40 years. Again, uh, just because it's never happened doesn't mean that it's not gonna,
So
not
what do you
happen
propose
this
is
time.
happening right now?
Like I said, in the beginning, I think inflation is transitory. We're seeing this happening. We're seeing, prices in lumber rise, prices of cars rise because of the supply chain shortages. In my opinion, that's what I attribute the current inflation in. So in the long term, like I said before, I think we're actually going to go through a period of deflation. I agree with Kathy Wood that if companies are, buying back their shares and not investing in innovating and reducing prices, where the companies, like the growth stocks as they're called, are going to continue to succeed. So that's my theory. Again, I can be proven wrong. I'm not predicting anything. Again, people are in the business of predicting things, and that's how they make money. But I'm not in the business of like anticipating what might happen in 10, 15 years, or being certain about it. I'm not 100% sure, but that's how I see things as of now. I think.
So
Go ahead.
I was just gonna say, speaking of, I was gonna kind of transition. I was saying, speaking of investing, I read this crazy statistic, which is pretty crazy. In 2020, there was about $302 billion invested in startup companies, which was a record-breaking amount, even in 2020, which was the COVID, like prime COVID time. And already by Q2 of this year, we have $292 billion invested into startups. And so we're pretty much on record to beat last year's record. And, I saw this statistics, and I was going to ask you guys, what do you guys think? Is this like, this might be related to inflation or things we've talked about with the economy, but I was just going to, ask you guys, what do you guys think this is? Do you guys have any ideas on what this is? I think there's a little bit of FOMO involved in this, where investors are kind of keen to, like, there's new opportunities coming in and new ideas coming in. So investors are just kind of going at it right now. But I don't really know. And nobody really knows why there's so much money in being invested in entrepreneurial ventures right now.
So
one thing,
go ahead.
Really quickly. So before we go into conversation on this, I want you to just like kind of just help me understand your question better. Are you saying that are you specifically talking about the VC field with venture capital, investing in startups, or just the overall economy as a whole with a lot of retail investors investing in companies? Like what exactly
no,
are you
specifically like startups, like investors that are investing in startups, right?
So more private equity, VC.
Yes, private.
Okay.
Yeah, right.
Okay.
Yeah. So I just want to know what do you, maybe, you guys probably, it's not like I'm looking for answers, but maybe kind of looking for insight on why maybe a lot of these VCs,
right,
these ventures are getting so much money from all these investors.
So what's happening right now is the United States is seeing more and more. Light keeps turning off. The United States is seeing more and more money, international money coming in. So we are seeing a lot of UAE money coming in. We're seeing a lot of China money coming in. And this is obviously going into investments. So not only is it going into startups like you're saying, but it's going into a lot of real estate. Aside from the real estate aspect of it, we'll talk about the startups. And I don't necessarily know if it's a good thing, because dude, trust me, I believe in startups. I believe like that's the way to go. We're a startup right here, starting our own podcast, doing our own thing, right? I'm a broker. I'm starting from the bottom, and I'm building my way up. But the reality is not everybody can succeed, right? And where does that money go? Essentially, what we're seeing is money going into startups, and the startups are not succeeding. So a lot of their money goes into marketing aspects. A lot of money goes into the production of their actual product. Or, if you're talking about fintech, their own programs, people that are actually qualified to do research and such. So I don't know if the money is being allocated properly, but it is very wild that a lot of foreign money is coming in and supporting that.
So specifically for your question, for the startup question, again, like I'm not into private equity. I want to get into it, but apparently you need a lot of capital for that, which I do not currently have, and most of us don't have. But I mean, just from the outside looking in, right? I think we're kind of seeing this on the equity markets, the public equity markets here as well, that this fear of missing out, FOMO, has been rising, and a lot of investors have seen the success, right, of which were once startups, right, like Lyft, Uber, a bunch of other companies, and seeing the success of it. A lot of these VC funds don't want to miss out on these ventures, and so if a company seems to say that they're going to revolutionize the world and they have a business plan to back it up, and their initial projections add up, I feel like they're just they might be investing in them just so they don't want to be left behind. So I'm not 100% sure about what we can attribute that to, if it's a bubble or not a bubble. A lot of people in the financial industry like to throw around the term bubble like every single year, right? And they're anticipating the collapse of the financial system in one industry or the other. So I don't know if it's a bubble or not, right? We've yet to see. But on the retail side, in terms of retail investors investing in companies like the so-called meme stocks, I do think that obviously has to do with FOMO, because nobody wants to lose out on 100% or 200% gains. And so I don't know if we can attribute that to the VC side specifically. But what do you think? I mean, do you think it's a bubble, since you're in the tech industry? So what do you think?
No, I don't think it's a bubble. I think it's more about kind of the FOMO aspect that you mentioned. I think that as a investor, maybe they see it like, rather than investing in like let's say $100 million into one company, I can invest $1 million into 100 startup companies, and maybe one of them might blow up.
Right.
One of them might be the next Google or Facebook.
Right.
So maybe that's how they're approaching investing, and that's why all these startups are getting more money. But I mean, as a whole, they're spending more money, and that's very surprising.
Do you think it's a fair way to spend money?
As Ibrahim said, I don't know. I'm not an investor. I'm not in private equity.
You guys seem like pretty good analysts to me.
I mean, no, they're VCs, so their job is to invest in startups. So they have to find these up and coming companies. I think so. Like VCs aren't just like people who are just like in their garages doing up numbers. They're actual like institutions who have employees and analysts who do this for a living. And so that's one of the reasons why I'm so cautious. I mean, a lot of VCs know what they're doing and some don't, but for the most part, if you're a big institution, or if you're just a big establishment, financial establishment, you have a VC wing, right? I'm assuming you have a whole organizational structure, and you don't just give out money to anybody. So I don't know if we can, if the same FOMO thing that like retail investors like us, easily fall into, can be attributed to the VC funds, because that's their actual jobs, right? Like that's their basically, like that's what they do for a living. So I mean, that's what they spend their time doing, as opposed to retail investors like you, I, and me, who are not, like, we don't do this for a living. So we can't, for us, it's really easy to fall into FOMO, right? Because we see one of our friends or someone we know making 3x or 4x returns. We also want a part of it, but VC funds are much more cautious on that end. So I don't know if it's a bubble or not. I'm not in the private equity market. So it's an interesting question, though. I mean, same thing can be said for the valuations of a lot of tech companies, and at least in public markets, right? Like Tesla, I don't even know what the PE ratio is at this point, right? I mean, it's ridiculous. So I mean, but if you're looking at the future outlook of Tesla, right? I mean, I think the future of Tesla is bright, and it's only going to get better and better, and the cost of Teslas are going to get reduced significantly as the technology becomes easier to make. So I don't know. I think in some cases it's rationalized, but like what happened in 1999, right? The dot-com bubble, where all these big companies, again, like a lot of big institutions, were just investing and getting behind companies who had literally a .com at the end, thinking they were the next big thing. And so I don't know if that's exactly what's happening, but yeah, it's definitely an interesting thing to
Also,
Think more about it.
speaking of tech companies, let's talk about SPCE, Virgin Galactic. First of all, did you guys see the launch? Did you guys see the Richard
Yes,
Branson?
Absolutely.
It
it
was
was
pretty.
awesome.
It was pretty awesome actually.
It was
The whole flight and
some very
everything.
memorable words spoken by him.
Yeah, he
Did you
was.
hear what he said?
I didn't stay for the after. I only watched the launch.
When he was in space, when he was like in the ship. Did you see what he said while he was up there?
No, I didn't. I didn't have
Like
the.
to all the kids
Oh, okay.
streaming right now or something. You can
Exactly.
Oh
hear.
yeah,
Yeah,
yeah.
yeah.
That was
What
awesome.
did he exactly say?
He,
Remind us.
he said that I was once a kid looking up at
Feel
the
like you did.
stars. I was once a kid looking up at the stars, and now I'm in a spaceship. So all those other kids out there that have a dream, don't let anybody tell you you can't do it. You can do it. You could be like me, like that. It was awesome.
Yeah. Um. So not to burst that bubble, that's a very inspiring moment, but
First of all.
but there is some people are saying that there are some problems with the space launch, or not problems, but kind of some complications. So the first thing is that the launch itself it kind of contributes a lot to the CO2 emissions. Um, it's about a business. It's the same amount of CO2 emission as a transatlantic flight. So and
Oh, wow.
which carries a lot of people, and this is only for like 4 people, right? This flight to space.
Was it
Another,
4 people or a little bit more than that?
I think it was around four
I think it was
people,
4 or 5. Yeah.
4 or 5, yeah.
Okay.
And not just the CO2 emissions. Another thing is this flight, they're starting reservations right now, but it's going to be cost around 200 to 250K. So while I really want to go to space and stuff, I don't think anytime soon I'll be going. And the other thing is that companies like Blue Origin, Jeff Bezos' space company, and SpaceX are saying that they're going to come out with better spaceships, you can call them, that use hydrogen or liquid oxygen engines, which don't emit carbon. So there is a lot, like it's great that he was successful in launching the first flight to space with like a commercial flight, but there's a lot of competition. There's some
Drawbacks.
yeah, there are some drawbacks and complications to the whole issue. um what are you guys' view on this? Did you guys think it was like just really awesome, or did you guys think about other stuff while looking at it?
So I really viewed it as like a new space race. You know, we obviously seen SpaceX, they're killing the game right now, but we also take a look at Jeff Bezos's space initiative, and then we take a look at Richard Branson's. And I do believe that, I don't know how necessary it is, but I do believe that it's innovation that is necessary, if that makes sense. We need this type of innovation to kind of just cultivate more entrepreneurs, cultivate, young kids that, just like Richard Branson said, that's really my whole aspect of it. I'm a very entrepreneurial person by heart. And so sure, there are drawbacks, but I think there's a lot more positives in it. Just looking at it as a utilitarian viewpoint, there's more good than bad in this. And so I do believe that this was a great thing.
Yeah, the one thing I am kind of not disappointed. I know this was their first flight and it's going to continually improve, but astronauts that have gone to the moon and stuff, what they always talk about is this thing called the orbital perspective. And this is about looking at Earth from a distance and seeing like, damn, we're a united species. We're all together. They have this moment. A lot of astronauts report this moment. Think about this type of space travel is this is called suborbital space travel. So they don't go necessarily like out there. It's kind of just a little bit above the atmosphere, I think. So necessarily you're not going to get that same experience. It's only like you get a couple minutes, or I guess like 30 minutes or whatever, in like a zero gravity zone. So I mean, it's still really cool, and I don't know if it's worth the money right now, but it's really cool, especially for rich people, I guess. But I am hoping that later on, as technology progresses, like you mentioned, innovation, we get to have that experience where we go really far out and see like, damn, this is Earth, like we're really all in together.
So here's my opinion on this. And again, full disclosure, I started investing in Virgin Galactic stock back in January because I just saw an opening, and
This is not financial
it's benefited
advice.
me a little bit. This is not financial advice again.
This is
Yes,
financial
but
advice.
again, in terms of your question about the climate impact, obviously, this has a huge carbon footprint. Like you said, we're only carrying what, like 4, 5, 6 people to see, like you were saying, it's only 53 miles above, by the
Yeah.
way, above
Yeah.
space. And so the suborbital perspective that you were referring to, the book that NASA astronaut, I think his name is Ron Garan, he wrote about, he had a different perspective, right? Because he actually went deeper into space and
Right.
had a better view,
Right.
obviously.
Right.
And so, like you said, I don't know if, I think, how long was he in space for? 4 minutes, was it, right?
Yeah, it
Approximately?
wasn't that. It was like a couple minutes. I'm not exactly
It wasn't
sure.
that
Yeah,
long.
but
Hmm.
the whole flight I think was an hour, but when they get to stay in the zero gravity zone, it was only for a little bit.
It was a little bit, yeah. So it wasn't that big of long of a viewing time. So in my opinion, like, we're gonna need to see uh people. I mean, we're gonna need to test out technology, right, for it to grow. And the Virgin Galactic, this specific model of space tourism, I'm not so much excited about this because we're not going to see, everyday Americans going to space anytime soon. I mean, I don't see it happening in the next at least 10 to 15 years, right? So it's going to be a bunch of rich folks, your Tom Hanks, Justin Bieber, Richard Branson, Elon Musk going up into space. It's good for them.
I hope
I'm not too
I
excited
hope
about it.
technology advances so we can do that in 10 years. That would be great.
Absolutely. I hope so too. But I hope we can go just beyond the 53 miles, because I think the suborbital perspective, to truly get it, you have to go and 53 miles, again, it is a lot, right? But I think we're going to need to see things like these happen. But what I am really excited about with Virgin Galactic is their hypersonic business division. So hypersonic travel, what that means is that you're going to see, so let's say you live in Los Angeles like we do, and we want to go to New York. The average flight time is what, around 5 hours, right? 5, 6 hours.
5.5, yeah.
5.5. So we're going to see that come to an hour, right? Or 45 minutes. So that's another wing of the company that they're working towards. And that, in my opinion, is what excites me the most and why I invested money in it back in January of this year. So that's what's exciting to me, seeing the results to, people across the world. I mean, flight time is such a headache. I mean, imagine going from, it takes what, almost a day, right, to go from India to Los Angeles, right? I mean, 18, 20 hours. If we see that reduced by even a third, make it 6 hours, right, we're going to just save so much time. And for people who are in the business industry, travel time just takes so long. If we can just cut those times, that would be amazing. And so that's what excites me the most about Virgin Galactic. Not so much the space tourism part, of course. If
Don't be a
I
hater,
had,
Ibrahim.
I mean, listen, man, if I was a millionaire, I'd be excited. I'd be super excited, but I'm not. So, like, if you're asking me if I'm excited personally, I'm not. But like, good for Richard Branson, who's 70
I'm
years old and can finally say he was in space with his grandkids.
Hey, I have to respect Richard Branson because he actually went to space. Like, he trusted his engineers, he
Right.
trusted everyone, right? Like Elon Musk
Awesome.
said, Elon Musk actually said that he wouldn't go to space. That he has no plans of going to space, like even on his own like ships. So yeah, that's
Yeah.
really awesome that Richard Branson actually, is committed. That's crazy.
I was thinking about that. I was like thinking to myself, like, I will give him 100% credit. He's 70 years old, and he had to go through some serious training to, like, have that zero gravity experience.
Yeah.
And I lost my train of thought here, but I was going to say that actually, yes, I just remembered. So one pilot actually died from Virgin Galactic, and in preparation for these flights, they lost one pilot. So, I mean, like,
I was not aware of that.
yeah. So this can
man.
happen, and so props to him for going up. But yeah, I don't know if $250,000 is going to incentivize some people from going, because a lot of these wealthy people, I mean, they're just looking to have new experiences. They're looking to brag, and so 250K for a millionaire, multi-millionaire, is essentially nothing for going up to space. You can have the
What's
bragging rights for it. I mean,
what's
they will.
crazy is I think they already have like 600 reservations. So there's a
Yeah,
lot
they
of
do.
rich folks.
Yeah,
So
they do.
Hey, that's awesome. I have no hate towards them at all. I think it's awesome. I think more power to them. They, regardless if it was them or if it's an institutionally wealthy family, Somebody worked hard for it, so it has to go somewhere, right?
Yeah, I agree.
Awesome.
Yeah, I want to clarify. I'm not hating on them going into space. Good
That's not
for
what
them.
I'm saying. You are hating though. That's a problem.
No, I'm not hating at all, man. I was pretty
joking.
happy. I mean, I was disappointed that SPC stock literally like dumped. It was literally like buy the rumor, sell the news the very next day. I mean, it doesn't matter for a long-term investor like me, but yeah, I mean, it's cool to see these things happen. And like I said, man, we're just gonna see technology. Like we're literally like at a corner store in time for technology, where we're gonna see prices come down, and more companies are going to try new things. And companies who are buying back their shares and increasing their dividends are just not gonna see the success that some of these other growth companies are gonna see in the future.
Yeah, I agree.
I think this is a good time to end our conversation. I mean, does anybody want to talk about anything else? Did we miss anything?
I think we covered some cool stories that have been going on recently.
Yeah. Well, sounds good then. Let us know what you thought of the conversation. Again, we're just trying this out. This is our first episode of just like, us conversing amongst each other. So let us know what you think. Obviously, exercise your feedback in a nice way. I mean, don't be nice in the comments, but like, let us know how we actually did. We'd appreciate it. But other than that, thank you so much for watching. Appreciate it. We'll see you guys next week. And yeah, take care.